All right, welcome back. We've got some breaking news on jobs. It's time for the January ADP private sector employment report. And ADP reporting that January private sector payrolls were up 291,000. That is a much stronger gain than most economists expected. December payrolls, though, were revised down, but only by 3,000 to 193,000. Joining us now is Mark Zandi. He is chief economist at Moody's Analytics. And this is the job market, Mark, that seemingly just won't stop.
Yeah, though I would caution that weather played a big role in January. It was mild across the country, so that really juiced things up, particularly in leisure, hospitality, construction. Those are very weather sensitive, and they got really jacked up in January. So there'll be some payback. And I think it's also just a technical point, but an important one for Friday when the BLS comes out. They are going to release their benchmark revisions. They do this once a year. And the BLS, the keepers of the data, have already told us that they're going to downwardly revise the data quite significantly by about 500,000 jobs as of March of 2019, which is the benchmark. So that January was a solid number, but I would heavily discount it. My view is that underlying job growth, abstracting from the vagaries of the data, weather revisions, is probably about half that, about 150.
Okay, but even if let's assume, Mark, that that's right. Let's even call it then 150. That is still above the pace of job loss. 125, I think, is where we're net adding jobs given immigration and people leaving the workforce. I mean, even at 150, even if you're right and it's just half of that, come on, still a pretty good number.
Yeah, no, it's a solid number. 150 is probably the current rate of the labor force, the growth in the labor force. That's the number of folks coming in looking for work, which is strong, and it's great because it's a tight labor market. We're drawing in people that previously had been disenfranchised, so they're coming into the labor market. So we have a lot of labor force growth. We can't do that forever, but that's what's happening right now. So I'd say what we might call break-even job growth is probably around that 150K. So that's consistent with stable unemployment, which is, pretty good in the context of a 3.5% unemployment rate.